1 sec to grab the URL. All right, looks like my computer is going to allow me to go both TikTok and. So let's do it. Hello, 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 hello. All right. Let's go ahead and start January 25th. Wednesday night strategy session. Obviously, I'm in the middle of my vacation, so I'm a little bit behind on what's going on, although I have been able to poke my head in randomly and sit on Discord for a little bit of the sessions. So we're going to be diving into sector, industry, and market cap analysis first. So we're going to look at Koyfin. We're going to go through that stuff. We're going to talk about today's move. We're going to talk about potentially the implications of a short-term volatility event due to Tesla ZR. And then we're going to scan. We're going to review current positions, actually, and then we're going to scan. So actually, let's start with current positions. Is there anything that we need to review as a group? Today was a very good day for most of us. I want to point out that, did anybody else grab the Seagate trade right off the bat? Anybody else grab that? Because Matt is in it. Dom is in it. What did you grab for Seagate? Because right now Seagate is up 8% after hours. So whatever you grabbed is going to be up big tomorrow. I believe Matt grabbed spreads. I could be wrong, but Matt was sitting at 100% at market close. So these things are going to be up like 200 or 300% tomorrow morning, assuming that we don't gap down. What was the play that you grabbed? Oh, shares? Cool. All right. Yeah, this is going to be a relatively large winner for you then. I'm assuming you grabbed it on the BRB pullback to like 57.5 or something like that. If you did do something like that, you're up near 15-20%. So congrats. Once again, that was a trade that we came up with as a group a week ago. Very basic setup. We'll go ahead and post the chart here. I believe everybody was in here when we came up with this trade. The only person that wasn't was Steve, and that's okay. We're going to run through it really quick. It's bread and butter play here when it comes to coming out of these markdown periods. I'm going to go ahead and zoom out a little bit and post the entire setup. But bread and butter distribution phase, it lasted about 4 to 5 months, going back into late 2021, beginning of 2022. We get a prolonged markdown period, and this accumulation period actually wasn't that long. It was only about 115, 120 days. Now we're in trades right now like Shopify and Zillow that had extended accumulation patterns rather. This does not fit that description, but it does still fit the Wyckoff market model accumulation area. Obviously, we had the very prevalent horizontal level break somewhere around $57. We said 57.5 would give us the ability to buy a pullback, and that's what most people were able to grab. It looks like earnings were after hours, and that's why we gapped up huge. So you're going to be sitting nice tomorrow, Dom. Matt, when you listen to this recording, congratulations, and thank you for the video that you put out on the trade. It's very valuable. Hopefully people take advantage of you giving away information like that because it helps everybody. Let's talk Shopify really quick. We have a bunch of people in Shopify. We have a wide array of trades in Shopify. Some people just bought straight calls. Some people bought shares. Some people bought call debit spreads. But this is one of those times where I would have never known this thing pressed 10% today. How would I have been able to guess that? How would you have been able to guess that? We got a couple price upgrades. But realistically, we don't expect Shopify to stop here. We expect Shopify to go from at this point, we might get a minor pullback off of the high RVol breakout. We could get a pullback tomorrow. But 55.60 is that price target. That was the call debit spreads that we were originally targeting. This thing fucking flew today. Everybody in this Shopify trade should be up at least 50% day one. That's it. Some of you are up triple digits already off of a single day because you bought straight calls. Congratulations. Like I said, there is no way any of us would have been able to know this was going to press 10% in a single day. But We were in a position on this because, I'm going to go ahead and zoom out and post it again. You're going to notice the similarities here between the setup of Seagate and Shopify. The only difference is, look at the accumulation pattern length as opposed to Seagate. Seagate, 115 plus days. Shopify, 265 days. What is the saying that we always have? Obviously didn't make this up, but technical analysis in general. What is the saying? The bigger the base, the bigger the breakout. So this giving us a 260 plus day base, if you will, up and over 44. I want you to focus in on the RSI pressing up into the 70 prior to the 10%. So for all of the people that like to play their RSIs as sell at 70 and buy at 30, if you're watching this live and you're not in our group, we do it the exact opposite. We buy above 50 and we buy trends that are ranging between 50 and 100. We do not sell at 70. This is a great example of a name that was at 70 and on the RSI way back at 43, and we're currently at 47 for, an 8 to 10% move. So we expect a lot more out of Shopify over the next few sessions. This could be one of those trades that we hit our max profit within a week. It doesn't happen very often. And if that does happen, we have to figure out how we want to roll these positions out to take advantage of a continued potential primary trend to the upside. So good job, Shopify. What else? AEHR. I mean, this is a fucking killer trade. A bunch of you guys are sitting in this. Some of you have contracts. Most of us have shares. This thing is up over 30% spot from our risk on area. For those of you that nailed the BRB on the 10th of January, you're up a little bit more. This is a big boy play. The guys that were able to remain patient over the first 3 or 4 sessions within AEHR have been rewarded handsomely. Like I said, this thing's up over 30% from our risk on level. Dustin is continuously showing us his position. He was able to grab 185 shares, but also Tattered's not with us right now because he's sleeping, Norway. Tattered was able to grab a lot of shares at around the same price point as Dustin, and he actually cut half of his shares at 32.5, and he's continuing to let his other 50% of his shares ride. Couldn't ask for a better execution. By the way, Tattered's 18 years old, and he's been trading with us for like 1.5 years or 2 years, so we've known him for half of his adult life already, and he's consistently getting better every single time. If you remember his last trade, I don't remember the name, but he traded a financial name for like a 30% runner as well, just like 2 months ago. Kid has some serious potential because he's patient. Something that Potter Sox and I were joking around about on Twitter. There were a couple guys that came in here. They took a couple trades with us with like 90 days of expiration, and then they just disappeared and never talked again to us, and then like canceled their subscription or whatever. I don't really care. But those plays, like for example, they bought Baba at the end of December. You think they had the balls to hold Baba until now? They were buying Marches in December. Those things are up like 700%. Probably didn't have the balls to hold that. But some of you guys did. So thank you for having patience, understanding that that's the name of the game when it comes to swing trading. You buy a position with time. You need time to fucking let it go and let the position play out. So I'm not going to go through all of these different names, but shout out PARA. I don't remember who grabbed this. This thing's up 60% in a single day. It was just a good day for us, right? So Baba, I will point out Baba just one more time because this was a 200 plus day high close. The close knows that's the most important thing for us as swing traders. 200 day plus high close in Baba. And if we zoom out really quick, we can look at Queb in general. This finished green and is pressing up into potential 342 day highs. This is almost a yearly high in Chinese related stocks. Good job. We have fucking nailed this. We went long Chinese stocks at 27 and we're currently at 35 if we're just looking at Queb. Because we're talking Queb, we might as well talk emerging markets as well. What are emerging markets telling us? The trend that we've identified for the last 4 to 5 weeks is continuing. EEM pressing up into new highs is what it is. All right, let's talk sector and industry strength really quick. We're going to look at it on the 3-month. We're almost ready to be able to pull out onto the quarter to date, but there's just we probably need one more week. Discord's doing that failed thing again. I don't understand why it does this. One sec. Really a pain in the ass if it doesn't just let me do this. There, it let me do it now. There's your U.S. sector performance over the last 3 months. So we're going to look through all three of these, industry and market cap. We're going to go through the process. Do we change trends? Are trends continuing in the direction that we expect them to? We've had a very, very, very good January. A very good January. People that are shorting these new highs are getting blown the fuck up. Part of our secret for not doing that is that last chart we just posted. But let's start at chart number 1. Materials up the most, still pressing. I don't believe we have any, if I'm not mistaken, I don't believe we have any materials exposure on the books right now because we are fully engaged in growth. But there's something to say about materials and commodities in general. Materials are leading over the last 3 months, 16.56%. Real estate, 15.41%. Industrials are actually starting to sputter out, at least on a relative basis here. Up 11.99%, but over the last week and a half, we have not been able to press any new highs. And as a matter of fact, we're falling back into a range. So XLI not moving as well as we had originally anticipated it would have, but we also have very minor exposure to XLI through FLR, if I'm not mistaken. Financials potentially breaking into a new higher high tomorrow or Friday. Obviously, there's a few of us that have positions open to the long side in financials. We have a JP Morgan. Did anybody ever grab that Citigroup trade? I never looked at it again. Citigroup gave us a BRB yesterday, but I don't know if the price action is right because yesterday everything fucked up. I don't know if anybody grabbed Citigroup. I'm just posting it. I didn't grab it. But we had talked about potentially looking to grab something in the financial space if it does continue to push. As of right now, it is continuing to push. And so we don't want to sleep on financials. I'm sure when we scan in a second, we're going to find a bunch of 50-day highs there, and we're going to be going through them. Utilities, we don't want anything to do with right now. Communications are fucking flying. Meta, Facebook. Sorry, Meta is Facebook. Google. All of the social media companies, all of the telecom companies, Netflix, things like this are flying. They have been the big monthly winner. Disney, shit like that. And they're continuing to press. Look at today. They're up and over tech now on the 3-month chart. This is an area of the market that we want to actively look for positions. Not only is it up over the last 3 months, but on an absolute basis, XLC is breaking up and over a horizontal level finally for the first time in like 2 years. So XLC is going to be a very high priority on our list tonight. XLK, all above SPY, everything is good. Consumer discretionary screaming to the upside, and we got a pop after hours in XLE. So nothing necessarily is changing from a trend perspective in sectors. We go to industries really quick. The only thing I want to point out is we have zero exposure right now to GDX. We had some exposure through NEM and AEM. UK Josh might still have some NEM, but as of right now, as a group, we do not have any group positions in GDX. It might be smart just to open up something. If GDX continues to run like it has over the last 3 months, we don't want to leave that alpha on the table, and these are generally pretty cheap, so we could grab 1 or 2 contracts and something with a lot of open interest and just see what happens. They're generally cheap, so let's just, as we go through the scans tonight, let's find something in GDX and kind of zone in on it. If you don't want to open it, totally fine, but this is one of those times where the industry is fucking ripping and we have no exposure now that we've closed our AEM positions for minor profits. So let's look at it again. Semis are the name that we want to get long. I mean, that's it. Semis are the hot industry right now. They're fucking ripped over the last 3 months, but realistically, they've ripped this year, right? This 1 month, semis have absolutely dominated everything. So I guarantee you we're going to find some 50-day highs during tonight's scanning session. Growth versus value. Has anything changed here? We had a down day today. Other than that, no. Right? Growth is, at least this year, outperforming value. This is a 3-month scale, so obviously value is going to be up over growth. But does that continue? I don't know. I think there's a very, very serious threat to value-related stocks, specifically in a market that is showing as crazy strength as it is. People want to buy growth. That's where a majority of the reward is going to be, and so value is going to have to sit in the back seat. That doesn't necessarily mean we don't want a long value, and it definitely doesn't mean that we want a short value. It just means that in a market where everything is pumping, growth is generally going to appreciate more than value. And you can see that this year, value-related stocks have underperformed against growth. It's proving it to you. You probably already think that, and you're right. Let's look at the market analysis by market cap, the last chart there. Has anything changed from our previous theme here, going back 3 to 4 weeks? Not at all. We would have liked to see some more. We'd like to see large cap growth participate more, but small cap growth is stealing the show here, and we understand that small cap growth typically leads the market up and down. Small cap growth has been fucking screaming this year, and that's what allowed us, for anybody that's sitting here watching this public, this is what allowed us to position ourselves long in growth names at the beginning of the year. Everybody else was screaming, these things have to fall, blah, blah, blah. The market's going to go to new lows, and, you know, respectfully or disrespectfully, I don't really care. We flipped everybody off and said, small cap growth is running. That is not bearish. Look at the total market cap in crypto, sans BTC and Ethereum. It's fucking running. This is not bearish. Let's go long. You can call us contrarians, or you can call us intelligent because we know how to read a fucking chart with a squiggly line going up. We want to buy the squiggly line going up. Large cap growth, on the other hand, underperforming against small cap growth. We do expect that to eventually catch up, though, right? So small cap growth is going to lead. Large cap growth typically lags at the beginning and then will catch up and potentially surpass small cap growth. The one thing, though, that I will say that stands out to me is that mid cap value up at the top. We understand that a majority of those mid cap value names are energy related. It just so happens that energy and after hours popped again. CVX with like 80 billion in buybacks they're planning this year. Energy names near all-time highs are something that we have to think about buying again. That mid-cap value up there is hanging out, up 8.05% over the last 3 months. And as we scan through on those 50-day high list, I guarantee you we're going to find more energy names again. So nothing has changed from our thesis standpoint in terms of sector, industry, or market cap analysis. As a matter of fact, the conviction is a little bit stronger, right? The positions that we're in are working. There's no reason to close these things early. Let's talk for about 2 minutes because I really don't give a shit about it. The Tesla ER, people that waste time talking about Tesla and its ER, whatever. It's fun. It's tabloid shit. It's like women when they fucking watch Keeping Up with the Kardashians. We know it's stupid, but we let them do it because it makes them fun. Makes them happy. Same thing when it comes to Tesla earnings and traders. If you're not specifically trading Tesla after hours, the fuck do you care about? Well, that's fine. We let those types of people be entertained. That's okay. No problem. What did Tesla do after hours? You know, I read FinTwit and stuff. People, I can't believe Tesla's ripping. And then you got the other side that says Tesla, you know, of course Tesla was going to rip. Who fucking cares? You either had a position or you didn't. Tesla's up after hours. Let's see, 5.87%. It's pulled up a bunch of other growth-related names as well. Markets, if Tesla holds, will probably gap up tomorrow. Tesla has that much sway, but realistically, none of us are trading Tesla in here. There was no clear opportunity for us using our system to trade Tesla, so it doesn't really matter in the grand scheme of things. In terms of short-term volatility event, we already expect the market to continue up. We've been long for a month. So Tesla gapping up after hours and potentially holding it into tomorrow's session, that doesn't surprise us at all because we're already long. We've seen market breadth improve over the last, even if the indexes didn't catch up yet, markets have been improving breadth-wise for quarters at this point. So this is not surprising whatsoever, all right? Any questions before we get into scans? Not that this matters much, but the small account closed today at an all-time high. I didn't take any trades. I just let everything play itself out. And at the end of the session, the index is closed green, and I was green on the day and at a high of day. So, do we have any questions regarding any of the theses surrounding sectors, industry, right? That's like the core part of our system. Everything we do starts with that macro analysis because now when we scan through the 50-day highs, we know, well, is it time to buy healthcare? Probably not. So if we find 50-day high healthcare names, we're probably going to skip them. Is it time to go buy utilities? Absolutely fucking not. Is it time to go buy consumer staples? Absolutely not. I saw some guys trying to figure out how to buy Coca-Cola today, like on the chart. They were like, what do you think about Coca-Cola? And blah. You know, in a market where everything is fucking ripping, can you please tell me why anybody in their goddamn mind would want to buy a consumer staple name that moves 1.5%? Are you kidding me? But maybe they don't have any fucking idea what that means. So we're not going to waste time looking at this type of crap hitting 50-day highs. Let me get the link for the... Link for the scanner is there. We know which areas of the market we want to be long. Let's fucking go. We only have 57 names, but I guarantee you there's going to be a lot of them on the 0 to 3% below 50-day highs. We're also going to run a 50-day low scan just to see. Copper names are ripping. You got FCX up 50-day highs. AEM. Fucking... This is the GDX industry that we were just talking about, right? For anybody watching this stream. This, yeah, this makes me sad. Going through and see if anything here stands out. We already have the PARA trade, but I'm going to post it because it could, well, no, never mind. I was going to say it could be a BRB candidate for tomorrow, but it doesn't look like it will be. Good job, Steve. You said you're up 50% in this name. Post it. How about Foot Locker? Oh my gosh, this thing gives me PTSD. We finally got the breakout that we had expected back in September. I'll remove this. Check this out. Probably not something we want to buy, but I'm posting it because it's a son of a bitch. Baba, we don't want to buy here. Most of us already have positions. Marriott's up. Wynn is up. Las Vegas is up. Las Vegas Sands. Unfortunately, we were not able to ever grab any of those. Kind of fucked up on that, to be honest, because those things have continued to run. I don't believe anybody grabbed this, but I'm going to post it because we found it. Looks like we probably charted this back in about a week and a half or 2 weeks ago. But this is another one of those patented accumulation patterns that played out for 279 days. It's the same thing as Shop, same thing as Zillow. Fidelity National Financial. Not something I think we would have traded anyway because of the low ADR, but once again, just posting it for confirmation that it did break. Did you ever grab the AZEK trade, Dustin, in shares or no? So we're looking at home builder names a while ago, and it hasn't been an easy trade, but they have consistently hit higher highs. When we were looking through these, I think we voted on shares instead of contracts because it was just not conducive for contracts to be bought. The options chain was shitty, and the nature of these things, not great. I'm going to post BLDR, which is an AZEK competitor. We had already charted this when we were looking at home building names. Don't think this is probably something we should buy, but I'm posting it because it is breaking out today. My gut says there's better opportunities. This is a bullish momentum regime, though. We stuck November 10th. So November 10th, we up and over the 50-hour side, and we've been coasting above it ever since. So this is, all intents and purposes, a bullish momentum regime. The only thing that I hate is that 2.7 ADR. I mean, even the volume on the left-hand side of the chart is not that bad. I'm actually going to pull this up on the chain. Just see if there's anything here, just in case. Chain is light. Yeah, so this is a shares trade, but at 2.7 ADR, probably not worth it. Did anybody grab the FLR trade a few sessions ago? I'm going to post it, but I don't think this is an entry here either. A lot of these names that we've already found, and they're just running. So I'm posting these to validate the breakouts, but not necessarily to go and buy them. AEHR, GEs. Oh, here's one. We talked about GE. So unfortunately, he's not on right now, but Colton, Super Batman, was able to identify and potentially trade the GE break at like $69, currently trading $80.79. Somebody had asked earlier if GE pulling back and then breaking a new horizontal level somewhere around 80.81 is a new opportunity to enter. Let's look at this. So I posted a super far out because that fractal, that range, not a fractal, but that range that it's set is important for two reasons. One, we horizontally channeled there for a fucking year. And secondly, look at all the volume that accumulated at that level. So I think it's important to understand that if we do start to get up in that chop zone, which we're in right now, we're probably going to be fighting through a shit ton of overhead resistance, which we're doing right now. So expectations for this trade, if we were going to take this, would be a hell of a fucking shit show up to 84, which is a 3.75% move. And then you see volume essentially fall off post 84, 83.75. And then you have pretty much clear sailings. Scroll out to the left and see where previous support is, or resistance rather. Yeah, there's pretty much smooth sailing up and over 83.75, 84 area. The question was earlier today, where would you assign your risk on, risk off level when it comes to GE? This is not an A setup. I don't even know if this is a B plus setup. This is definitely just a straight B setup because this is not enough time to really call it any sort of substantial horizontal level breakout. But I'm going to post it. If you like GE, this is a flagship name in XLI. It was a super cheap trade. Where we're at right now, around $81. Let's call it even. $81 could be your new risk on level, which we could be testing tomorrow. Up to you whether or not you want to buy this to begin with. But if you want some XLI exposure, understand XLI has been underperforming over the last week and a half compared to other value areas and specifically growth areas. But if you want GE, you can either buy it on an 81 break, you can wait for a potential pullback to 81, or you can do half and half, get into the position at the 81 break, and then look to average in if it does pull back. If not, just ride with whatever position you get in. I'm looking at the chain right now, and it has a relatively $90 is the top of the range. You could buy the $90. What is this? Oh, 95. Never mind. The chain has an 85.90 call debit spread in March, which doesn't give us a whole lot of wiggle room. But it's going for 119 for a max profit of 381 right now. There's a 62% chance of a 50% move, which is pretty fucking good. Would have preferred this a little bit closer to $1. But this isn't the worst idea. I don't love it. I'm not going to open it myself. But if you like GE, you want an industrial name on the books, there is a March setup available for about $119. And I don't like the Junes. So we're going to go ahead and skip the Junes there. So there's a setup for March if you like GE. If not, don't open it. But 81 is the risk on, risk off. There are 193 names on the 0 to 3% below the high. 17 pages. I'm going to go ahead and append a change from open up. 173 names. Holy shit. There's the new URL, but before we go through it, I'm going to go through the charts that you guys posted. Warner Brothers could get a BRB. Let's look. Yeah. I mean, this is an XLC related name too. We were just talking about XLC being hot. This is sub $20, so shares are definitely in play here with a 5.45 ADR. Let's check the chain just to see. The chain is fucking loaded. Wow. The chain is loaded across the board. April's, March's, June's, July's. There's a lot of money right now in Warner Brothers on the options chain. That's pretty crazy. The fuck? Man. This is a cheap punt. A 20% move up to 17.5, probably a 25% move if we get a pullback. You can get the April's, so okay. This is a cheap punt. This is an XLC related name with the options chain just fucking loaded. Not necessarily validating this idea strictly because of the options chain, but it's very rare to find a name with this much open interest that most people aren't talking about. So I think it's fair to say that these, this isn't a retail heavy name. This is an institution heavy name. On the chain itself, you do have a lot of open interest on both sides, calls and puts. So I don't want to sit here and just make it sound like everybody is buying Warner Brothers. They're not. There's lots of put activity as well. It's just a very active options chain. What I'm looking at, though, are the April 17 5s. If we get a pullback, we could probably grab these things for close to 50 cents, and that'll have a 0.25 delta. So a 0.665 IV with a 43.7 IV rank opens it up for just straight calls or call debit spreads. For those of you trading a small account or a smaller account, the Warner Brothers 17 5s for April will give you 86 days of expiration, 85 tomorrow, and you might be able to grab these for 50 fucking cents on a pullback in towards horizontal level break. I don't know if we'll get a full pullback to 13.5. That'll be a 7% pullback. Probably not going to happen, but any sort of pullback tomorrow could open yourself up for those 17.5s. Probably see a 200 MA retest, if anything. Do you want to point out that this is not an A setup. This is a very, very, very B setup. So if you're thinking position sizing because it's cheap, this is a B setup. Do not go more than 1R. I probably wouldn't even go 1R for you guys with big accounts, like half R. This is a punt. It makes sense from a technical standpoint. The chain allows you to do stuff like this. And for those of you that are trading shares, once again, 5.45 ADR is no slouch. So it's up to you. I'm going to type out that Warner Brothers play, though, just in case for the guys that watch this recording afterwards. WBD, April 21, 17.5C. Right now it's going for what? Like 70. There. We've had some luck over the last 2 months with these cheap little punts that make sense on a TA standpoint. EDU, for example. IQ. DADA. So I don't want to discount this entirely. It's a decent setup. Thank you, Dustin. Foot Locker, we're not going to trade. FNF, no. BLDR, I already looked. FLR, no. GE, we already talked. Ally Regional Banks. The problem with these regional banks, I know you know this, but there's going to be virtually no open interest on the chain. So if you're strictly trading options, this is going to be a son of a bitch to get filled. Have support turned resistance that we're testing right now. Also the 200-day moving average. But this is encouraging to see just from a industry standpoint that regional banks are now responding positively after a year and a half straight up drawdown. 3.68 ADR. Your risk on level would be somewhere north of the 200-day moving average, Dustin. I'll double check the chain, but I'm pretty sure this has zero open interest. April's literally have zero. They must have just opened up. The March 36s have 1.16K. The March 36s. From current price, that's what, a 10%. Hey, here we go. The Marches, 50 days to expiration tomorrow. 36. Here's another one. Cool. I like when we find little gems like this. I don't know if this is going to be the greatest setup in general. The chart isn't perfect. Regional banks isn't necessarily an industry that we are openly looking to buy yet. And financials are specifically major banks. We got that Morgan Stanley, Citigroup, and a JPM idea we've thrown out there. Regional banks are just going to be a lot harder to trade. But if they run with financials, which they typically do, this is a very, very cheap regional bank play. The March 17th 36C, and it's going right now for about 63 cents. So another one. For the guys that are trading smaller accounts, once again, if you're trading shares, this thing moves enough to be able to get by with shares, no problem. For those of you with smaller accounts, the $36 calls are going to give you an opportunity to grab a 10% move to the upside, which is totally reasonable off of a 3.6 ADR. You have 50 days to grab it. It's the main thing. For anybody listening to the public side of this that doesn't get to, hear this lecture every fucking day, make sure when you're choosing your strikes and your expiries that they make sense. And by make sense, I don't only mean the Greeks, but do they pass the fucking logic test? Is it reasonable to expect, for example, if you buy out of the money play with 20 days of expiration, is it reasonable to expect the stock to move 50 fucking percent if that's how far you're going out? Some stocks have huge ADRs, 12 to 15%. So maybe a 50% move is not out of the, out of the question. But if you were to buy a 50% move in something like Ally and you only have 30 days and this thing moves 3.68 on average per day, that is unrealistic and you were buying a losing contract from the very beginning. The reason why I bring this up is the $36 calls are only about 10% away. With a 3.68 ADR, in a perfect world, you would need about 3 perfect days to the upside to grab this. We very rarely get that, but you have 50 fucking days to grab that. Do you think that within 50 days, you're going to be able to grab 3 great days? Probably, specifically in an uptrend. So this passes that test. It's cheap. There's 2 cheaper plays for the guys with smaller accounts, Warner Brothers and the Ally play. Now, Ally, I will say that risk on level is basically the 200-day moving average. We closed underneath it today, so not sure if we would consider this a breakout or if we want to wait for another full day and a pullback. For all intents and purposes, this is a bullish engulfing candle on the daily, so we probably will get the push up and over the 200 tomorrow. So we can watch ALLY off of the open. Now we're going to skip EXPI because it sucks. but I appreciate it. All right, let's go ahead and get back to the scans. I did the 0 to 3% below the high. There's 173 names here. Most of them are not going to be things that we're going to be trading. Look for good quality setups on this because a lot of them are going to be shitty. Like, for example, Meta, not a shitty name. It's absolutely fucking destroyed everything for the last 3 months, but it's not something we're going to buy within our group because the system doesn't dictate it. As a matter of fact, when we were looking at buying Meta, I don't think anybody did, but we were buying it off the 133 pivot for an attack on this low volume node. If you're watching the stream, you can see the whole trade idea here, but I just don't think anybody grabbed it because we're already long a bunch of other shit. The name is moving. We're up about 6 or 7% off of our risk on level. This was a solid setup that I think nobody grabbed it. But all right, let's keep going. So you know we're live on every platform, Landon. So keep the conspiracy theories down. Retail continuing to show strength. TJ Maxx, a fucking bummer of a play. That was a sack of shit. Monster too low of ADR. If I don't run the Big Blue Sky scan because I'm rambling about another chart or something, can somebody remind me before we hop off to run it? We probably won't get too many hits today, but these things are fucking killing it right now. Anybody grab the NVIDIA play, or are you waiting? I think Hannah was the one that was talking about it later, later on in the session. For those of you watching the stream here, we have a play cooked up for TSM, NVIDIA, and ALGM. These are our 3 semiconductor names that we've looked at. Anybody grab NVIDIA yet? Since we're talking about it, might as well post TSM as well. Chart's going to look nasty for anybody watching the stream because of yesterday's price action, but it's legitimately not real. So that kind of sucks. TSM gave us pullback today in towards original horizontal level near 90. Today's low, 91.12. Tatter did enter a position in TSM today, so first initial position within TSM. Texter grab. Did you grab it today? Perfect. For anybody watching the stream, I want you to notice something. TSM broke out here, and we said, hey, look, we should probably be looking to buy this. 2 days ago, we found the name we wanted. Yesterday happened. Nobody did anything. Today happened. 2 down days in a row. And everyone goes, hey, we're back at the original area we were looking to buy. Is this a good time to buy? Yeah, that's the best time to fucking buy. Because if it continues to go down, you cut it early for a very small loss. But what do you expect to happen after a breakout? You expect a pullback and then a bounce. So if you were able to buy that pullback, you get a cheaper contract or position if it's shares, a closer stop, because if you fall below support, you just simply stop out. But the expectation is a bounce. So for all the goobers that bought up here, they had to hold through this big long drawdown. Most people aren't able to do that. Good job, Texter. You and Tattered fucking nailed it. So I hope it does bounce. It is up after hours, so good job. You don't have to tell me, but which contracts did you buy? Did you buy the spreads that we were originally looking at? And I'm glad that we have that. Because we just talked NVIDIA, I may as well post ALGM. I took this play, excuse me, 2 sessions ago in the small account because I only had $33 of buying power, and this thing was like, I actually don't know, like $30. I don't remember the spreads that I recommended, but I know I recommended spreads. So if you grab the spreads we recommended, then I get it, and that's cool. Good job. It's like a 4-to-1 setup, I'm assuming, maybe even a little bit more. Today it might have been a little bit more than a 4-to-1. I got the ALGM $45 calls looking for an all-time high breakout. This is not typically a chart that we would trade as a group. Essentially what we're looking for here is a mid-cap all-time high breakout, strictly just due to semiconductor strength right now. Semiconductors are fucking ripping. NVIDIA, TSM, AMAT, KLAC, not all of them are tradable. Then the small account, I tried to get filled on TSM. I couldn't could not snipe a cheap enough call debit spread to get long, but that was my A setup in the semi names. ALGM is a B, but like I said, it's a mid cap all-time high, which means that if semis do run, this has an opportunity to hit all-time highs, and you're going to get all the fucking small cap, mid cap traders on this thing. And I'm realistically not looking to hold this up to 45. If I just get any initial push up and I'm up 100% or something, I'm going to close it. So that's the thought process behind ALGM. Steve got the ALGM 45 as well. I have I don't want to say zero expectations for this, but I have like a lower expectations. I think the play to make was the TSM play. But we've been very, very vocal about that. And NVIDIA is a play as well. It's not as high quality as TSM because obviously TSM is leading in the space. But NVIDIA gave us the opportunity to get long, or is giving us the opportunity to get long the space. ALGM just fit the small account, unfortunately. Not the setup that I love, but that's okay. By the way, Brian's not with us right now because he's managing his Airbnbs, but he grabbed a bunch of plays over the last 3 to 4 weeks, and they are fucking killing it. So, Brian, congratulations when you listen to this. Brian grabbed Shopify before everybody, and it is up the most out of everybody in the group. So, good job, Brian. So that's it in terms of 50-day highs. We liked it. You need to get some sort of exposure in semis. If semis continue to press on an absolute basis, I'm going to go ahead and post the semiconductor chart itself because we didn't. If semis continue to press, you don't want to miss this. This is the leading industry within the tech sector. It's literally inexcusable to not grab some sort of position in this space if you're in this group. It doesn't have to be TSM. It doesn't have to be NVIDIA. But you need to find a way to get involved with semiconductors as long as they're trading north of that 200-day moving average and that new immediate high at, we'll say, 230. I think that was the line in the sand that we drew this time around. If we're above 230 in semis, SMH, we want to be long semiconductors, and they're working right now. So try to get long some sort of semi name if you don't have any exposure. I think most of us probably do. If you ever post an inverse head and shoulder ever again, I'm going to fucking drive to California and kick the shit out of you. No. Yeah, it is an inverse head and shoulders, kind of. Just kidding. There's a lot more going on than just an inverse head and shoulders. But you're right. From a chart pattern perspective, yes. I saw some 85er on FinTwit talking about it can't be an inverse head and shoulders because the neckline slopes. The fuck is that? It absolutely can. It just impacts the ability to forecast the profitability on those things. Head and shoulders can absolutely have ascending and descending trend lines as necklines. Horizontal is always going to be the best. Statistically, they work out better. But absolutely, you can have ascending and descending trend lines within horizontal or within inverse and non-inverse head and shoulders. So, yeah, shorter distance. I mean, you're right. It is. It's a downward sloping neckline. That's a playable name if you're into playing inverse head and shoulders. Let's look at 50-day lows really quick. And I remember that we want to do the big blue skies. Anything here stand out that we should be aware of? ENPH is kind of a big deal, but I think ENPH... Kevin told us that ENPH is selling off like it is because it's one of its major revenue streams was the California market in terms of solar, and I think they passed that law that is basically screwing the entire business model up. So ENPH is obviously, we're not going to trade it to the long side or to the downside, but ENPH is probably going to be hurting in terms of semi names. Aerospace and defense gapping down, CVS gapping down. So nothing here is necessarily overwhelming. Let's do 2 more scans and we'll call it a session. Let's do 52-week highs. Only stocks. And let's do large caps only. 21 large cap names hit 52-week highs today. So today was not a great day for most of it. It's a terrible day, actually. And still, we have 21 52-week highs in large caps. Let's see 52-week lows. 1. This is why we are better than most other swing trading groups. Because you look at a day like today and everyone's like, the market's going to fucking fall. You have 1 large cap name hitting a 52-week high on a day that the entire fucking market pulled back. And you have 21 hitting 52-week highs. 52-week is a year, by the way. We're not shorting this. The market breadth has been gradually expanding. We're seeing it across the board. Let's go for Big Blue Sky setup, and then we'll call it a session. One sec. No optional shortable. Market cap. Under 10 billion. IPO date within the last year. Let's do average volume over 500,000. Let's just see if anything even stands out here. Mike is still holding a sizable amount of AT. So I can't believe it. Oh my gosh. This thing just continues to press. I don't remember where he originally got long, though. Did he originally get long off of the 1550 area or the 1850 area? Anybody remember? Mike is long AT&T with a very large size of shares. It's up at least 45%. He's not able to make these strat sessions anymore because of work, but shout out Mike. Here we go, baby. AT landed. Post the chart, Texter. MBC probably going to play the horizontal level somewhere around 950. There's an opportunity. Consumer durable, home furnishings. Same idea as BLDR and AZTK. AZEK, sorry. But yeah, it was a cute little small cap, recent IPO, end of 2022, pressing up into new highs. Dustin's probably already drawn up the order there for MBC. DO, there's a bunch of guys that are still in the DO trade. Shout out Dom. Dom got stopped today, which is totally fine, but he grabbed that thing for how much? Dom's in here, 15-20% or something like that. So good job. That was a shares trade for him. And that's it for Big Blue Sky. Let's see. Texters. This is a rounded bottom. CCL. Yep. Yes. Same setup as Zillow. Same setup as Shopify. Absolutely. I think you want to verify those the ETF inflow on this. We're not going to do that for the public stream, but you're going to want to verify the ETF inflow. So go to Koifin, check out which ETFs hold the most shares, sector and industry wise, and then see what those things are. This is the right industry. We know the casinos, hotels, resorts, and everything are fucking ripping right now. So I'm going to go ahead and post my chart. Yeah, good job on that DO trade, Dom. Yes, Landon, you're not wrong on this. There are a couple financial names that are setting up very well. I don't think we've just, as a group, we haven't opened anything up. But a few guys have opened up some beginner positions, so we'll see if they continue to run. CCL, absolutely rounded bottom. That is accumulation phase going back about 8-9 months. So, yeah. Check the chain really quick. By the way, good job. You deserve The old pat on the back. We'll run through this trade idea and then call it a session. This is a 226-day accumulation phase. So adjusting your expectations, you'd be looking to buy April's or June's. Bigger the base, bigger the breakout. Without me telling you, I know you're not watching the stream, what is your price target? Give me your price target. And for anybody watching this, we run these things Sunday, Monday, Wednesday. Hour long every single time. We update sector, industry, market analysis, market cap analysis rather. 3 days a week. We're trying to always tune in on whether or not our thesis is right or wrong. We're very quick to react when trends change, which is part of the reason why we're able to cut losses relatively quickly. Don't have one, but maybe 15, 17. I have a price target at 14 due to the 1.618 fib extension, but volume doesn't kick in until 17. So let's come up with a you're looking at the right thing with the VRVP. Let's come up with a fun play. The April 14s are a 0.21 delta inside the 1 standard deviation band. You can grab them right now for 30 cents. So think about this really quick. You have a $14 price target. You have 86 days to get there. But you also understand that halfway through that price target is a low volume node. So what if you grab the 14s, and when you get up there, you decide you can sell, you can hold, you can sell a portion, obviously sell half at 100% no matter what. But what happens if this just continues to cruise to 17, that next medium volume node? Now you're $3 in the money with time. That's when the compounding effect of options really starts to kick in. And if you want to go even better, in my mind, grab the Junes. The June 14s are going to run you $53. So you have 142 days on this name for fucking $50 basically with a 0.28 delta. That's so stupid, I'm going to write it up. It's a good play. CCL 14C, right now it's going for 55 cents. You have 142 days to get this thing to 14 bucks, and everything on the backside of that is extra credit, and you're in the middle of a low volume node. That is a fantastic play. Yeah. Thing here is, though, we don't want to enter until we clear maybe 11 and a couple pennies, because right now we're trapped underneath some overhead resistance that we've been unable to break through this entire accumulation phase, right? So these will probably reprice when we get up and over that $11 area. We'll probably lose out on, I don't know, 10 cents probably. But still, if we're able to grab those Junes for like 60 cents, that would be dope. Somewhere around 11, look for 11.25 to 11.30 close. This is going to be high on the watch list. Texter, appreciate it. Total 3, your crypto market cap without Bitcoin and Ethereum. So it's all of the shit coins, the riskiest parts of the market is breaking out. I mean, this has been central to our thesis for the last 5 to 6 weeks, and it's working. So whether or not people want to listen to what you guys have to say or what I have to say, I don't really give a fuck because we're making money doing it. And we've been pretty much right on the entire time. So good job, Petabanes. For those of you listening to the recording after this, good job, Petabanes. For those of you watching the public side of this, I highly encourage you to go through Twitter and read like the last 4 to 5 weeks worth of our updates. We've been on the front side of this pump basically from the beginning due to emerging markets and China names. So, good job. All right, any questions, guys? Names for tomorrow. CCL's not ready yet. MBC's not ready yet. But Warner Brothers, WBD, and ALLY tomorrow morning pre-market, we can both look at both of those and see what they're doing. Both of those are cheaper punts, but it gives us exposure into regional banks, which we have none, and communications, which we need. I'm going to stop the stream on YouTube really quick. If you tuned in on YouTube, I appreciate it. We run these things Sunday, Monday, Wednesday, but this one was public. Thank you to Canada Josh for forcing me to do it. Hopefully the guys that stuck through all of it learned something.